Nvidia's no good, very bad week, despite an earnings report that wowed the street once again, including you personally and the way you covered this company. Couldn't throw any stones at this report, yet what gives with this bad week for this stock?
The stock crashed, even though Nvidia just delivered a perfect earnings report.
I'd expect this is a stock that would actually be 210, 215. Look, this is, if you look from a report perspective, there's no way they could have done better. I mean, the $78 billion for next quarter.
Even Nvidia's loudest bull on Wall Street expected 210, 215. Instead, it crashed. And by the end of this video, you'll understand exactly why and what it means for your money.
$78 billion for next quarter, the $500 billion plus in terms of the pipeline, what we see with Blackwell and Rubin. I just think, in my opinion, this is as nervous as I've seen tech investors going back to last April. And we're in a sort of AI ghost narrative where good is bad, bad is worse.
$500 billion in the pipeline, the Blackwell chip generation fully ramping, the next architecture already in development. These are not the numbers of a company slowing down. These are the numbers of a company accelerating. So what is the market actually afraid of? Think about it this way. For 2 years, the artificial intelligence narrative was simple. Nvidia makes the chips. The big cloud companies buy the chips. Everyone wins. But now that story has layers. New competitors are emerging. The relationships between the biggest players are shifting. Newer, leaner companies are threatening the dominance of the giants. And the market hates complexity almost as much as it hates bad news. When both hit at the same time, this is what you get. A sell-off that makes no logical sense on the surface, but reveals a much deeper fear hiding underneath.
Where good is bad, bad is worse. But I take a step back. I look at OpenAI with the funding round, check. You look at the data center revenue from Nvidia, check.
Here's what Dan Ives is actually saying underneath that phrase. Strip away the noise, strip away the panic, and what you see is a checklist that keeps getting filled in. OpenAI just secured a massive new funding round. Nvidia's data center revenue, the single most important number in the entire artificial intelligence story, is still growing. The fundamentals aren't broken, the sentiment is, and that gap between sentiment and reality is exactly where things get dangerous, or where fortunes get made.
This is a turbulent period, but our thesis is unchanged. I'd say more bullish relative to the overall thesis.
Turbulent period, thesis unchanged, more bullish. That's Dan Ives looking directly into the panic and saying he's not moving. He's not hedging. He's not quietly walking back his price targets. He's doubling down, and that matters. Because when the smartest people in the room stop panicking and start buying, that's usually when everything changes. But before we get to what the smart money is actually doing, let's talk about the collateral damage. Because Nvidia isn't the only name getting destroyed right now. The panic is spreading, and it's hitting stocks that have no business being this low.
Look, I mean, Microsoft, I think it's probably the most disconnected stock that I've seen in the last few years relative to where it's trading. And obviously the view like Amazon, others catching up.
Microsoft, one of the most profitable companies on the planet, deep enterprise dominance, one of the closest relationships with OpenAI of any company in the world, and it's trading like a company in serious trouble. Dan Ives called it the most disconnected stock he's seen in years. The price and the reality have almost nothing to do with each other. That tells you this isn't surgical. This isn't investors carefully analysing each company and selling the weak ones. This is a blanket panic, hitting everything in the artificial intelligence space, regardless of what those companies are actually doing. Amazon is in the same boat. When you break down what Amazon is actually worth, piece by piece, it's the most attractive it's been in 4 or 5 years. The data center business is accelerating. Andy Jassy is pushing harder into artificial intelligence than ever before. And yet the stock is down more than 9% for the year, thrown out with everything else. That's what panic looks like. It isn't precise, it's a flood, and it takes everything down with it, whether it deserves to go or not.
Right now, we are seeing a situation where all these stocks are getting thrown out. There's a view, obviously Anthropic, Claude, as we've talked about in terms of the worries that's happening here in terms of the entrenched players.
All of them, thrown out. And the fear underneath all of this has a name. It's the growing belief that the big established players, Nvidia, Microsoft, Amazon, might be losing their grip. That newer, leaner competitors are coming, that the moats these companies spent years building might not be as deep as everyone thought. That fear is what's driving the selling, and right now, it's winning. And that brings me to the moment I need you to stop and sit with. We're halfway through this story, and I want to bring you back to the question we started with. A perfect earnings report, a crashing stock, a signal most holders are completely missing. Here's what it comes down to. If the demand for artificial intelligence infrastructure is genuinely slowing, this sell-off makes sense. The fear is rational. The crash is justified. But what if demand isn't slowing? What if it's still accelerating? And the market is just too deep in panic to see it clearly, because the people actually on the ground, the ones physically building this infrastructure, are telling a completely different story than what you're seeing in the stock prices.
Okay, so listen, that's a positive story. Only one of the analysts thought it was bad. Every other analyst congratulated you. The stock is down very badly. You were in the business of trading. What's wrong with the stock, or what's wrong with your narrative?
One analyst out of the entire street thought the results were bad. Just one. Every single other analyst congratulated CoreWeave on its performance, and the stock still got destroyed. That tells you everything. This isn't about analysis anymore. This isn't about earnings or guidance or pipelines. This is pure market psychology. And right now, psychology is winning over reality.
The demand for the infrastructure has been relentless. It's been relentless for 3 years. We have never wavered from that position. Our clients are increasing the demand signals that they're giving us.
That's the chief executive of CoreWeave, one of the fastest growing artificial intelligence infrastructure companies in the world. And he's not reading from a forecast, he's speaking from the ground. His company is physically building the data centers, the compute networks, the backbone the entire artificial intelligence economy runs on. And what he's telling you is that demand hasn't slowed, it hasn't paused, it hasn't blinked. 3 straight years of relentless, unbroken demand. While the stock market panics, the actual businesses are overwhelmed with orders.
We are constrained by our ability to deliver more capacity to the market.
They're not constrained by demand, they're constrained by supply. They physically cannot build fast enough to keep up with what the world is asking for. That is not the profile of an industry that's slowing down. That is the profile of an industry still in its early innings, growing faster than its own infrastructure can support. The panic in the stock market and the reality on the ground are telling 2 completely different stories right now. And CoreWeave made a decision that reveals just how serious they are about this moment, knowing it would hurt their short-term margins, knowing it would make investors nervous, knowing the stock would take a hit. They accelerated anyway. Because when you're standing at the edge of a once-in-a-generation opportunity, hesitation is the most expensive decision you can make.
We made an intentional decision to accelerate our builds, understanding that there was going to be a margin hit. But this is a once-in-a-generation moment, and our job is to go out.
Once in a generation, the people actually building this infrastructure, not the analysts, not the commentators, but the operators with billions of dollars on the line, believe the window to capture this market is narrow, and they are sprinting toward it with everything they have.
Our backlog is enormous. We are going to be delivering compute to the most important, to the largest companies in the world. We're going to be delivering compute to the broadest component of the economy. We're doing our job.
The backlog is enormous. The largest companies in the world are in line, and the demand keeps growing. That's not a crash signal. That's a buying signal. The question is whether you see it before everyone else does.